Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 10th of May. Starting off with the FTSE 100, which still seems to be hanging around either side of its 50-day moving average there around the 77.30 area. Above that, we're still looking for the resistance line from February to break around 79.20. And that would unleash a potential move up towards 8,000 plus. And the top of that rising trend channel from back in September, currently heading as high as 8,300, maybe for the summer. But at least we might get 8,000 plus if we can get back above that February line. In the meantime, looking for the RSI, which is now at 46, to get back above neutral 50 to give us a continuation or a long signal. And also perhaps just in terms of the recent price action, an end-of-day close back above 7,800, which seems to have come in as resistance over recent days. On the downside, if we do fail below 77.40 or 30, rather, the 50-day line, then there's a risk of a test of the floor of that channel and the 200-day moving average at 7,500. But I think that's probably the worst, but looking for more likely would just be a test of April support around 76.30. Moving on to the DAX, which has consistently been better than the FTSE 100. Here, we're still above the old resistance from February and March, 15,700. Below that, the risk of 15,400 on the floor of that September rising trend channel. End of day close through 1,600 should now be enough for this market to head up to 16,600, perhaps as soon as the end of this month. The reason for saying the end of this month is because we have the RSI right in the right place, around 57, and recent bounces above the neutral 50 level as well. On to the Dow, where there's still just one thing to think about, or maybe actually two things to think about. The first one is that support has recently been around the 50-day moving average, 33,300, which is good. We had a bear trap below that 50-day line, which was good. We also had a gap close buy signal at the start of the week above 33,400. So we are looking for that one-year resistance line there from, basically the end of April last year. 34,100 to be broken and then unleash a new leg to the upside, perhaps as high as 36,300, 600 rather, over the course of the summer. But in the meantime, dips towards the 50-day line look like buying opportunities, and the RSI also has pushed back above the neutral 50 level. On to Bitcoin, and here we can see hopefully that this market is still consolidating, but broken back below the 50-day line, which is what we didn't want it to do after a couple of attempts at finding support there. There is support around 26,700, which was basically post-March or late March support. And then below that, the former post-August resistance of 25,000. But hopefully we'll get away with 26,700 or what we've already seen here. On to the stocks, and the first one is Afentra, which people seem to be very keen on for some reason. It's obviously looking for the shares to break to the upside after today's news. It does look more likely now. We've already got the 200-day line rising. We've broken above, or we're trying to break through recent resistance around 27 pence. So we want to see an end-of-day close above 27 pence to give us a move to the top of that rising trend channel from August as high as 34 pence. Maybe as soon as the end of next month. Support at the 50-day moving average around 24 pence. Recent RSI action has been at or above the 50 level, so that's also a continuation signal on the latest recovery moves. Moving along to a stock which I managed to avoid in the RNS hot list today, which was perhaps a mistake, but at least on the charting front, you can see the shares have hit the first target there, the first rather ambitious target we had there around 1.6 pence. Above that, on an end-of-day close basis, we're looking for as high as 2.6 pence, which is the upper parallel of that December rising trend channel, or at least the upper parallel of the resistance line there. So ideally, we're just in a mid-move consolidation and heading towards 2.6 pence. On the downside, at this stage, only back below the March peak neckline resistance and the 200-day moving average around 1.25 pence, really upsetting the idea of recovery here. Interesting, the build-up ahead of the move today was a very, very quiet one, so obviously the news caught people off guard. Moving on to a stock which I've been looking at, but never, I don't think I've actually covered it here at all, Clean Power Hydrogen, and just giving us With this stock and another one I'm going to look at, the hint that hydrogen may be coming into focus. Here again, we've hit what would have been the initial target there around 28 pence, now looking for as high as 52 pence at the top of that broadening triangle from last summer. Upside valid while we hold above the initial March resistance around 24 pence. So 24 pence hopefully will be held at the low today just above that. So that seems to be a decent idea. We already had the break of the 50-day line yesterday for the first time in November. Moving along to a stock which seems to be improving by the week, and the latest results today underlying that. Production up strongly all over the place for Dekel. The charting situation already gave us the warning that we were turning around. We had bullish divergence there. We broke through the 50-day moving average at the third time of asking, so even if you were late there and going at 2.6 or 2.7 pence, you've had a good run so far. Gap higher today. Initial target here 4 pence, and we're near to that. And the next target up to as high as 6.5 pence, maybe by the end of next month. Hopefully now the shares will finally start motoring properly. On to another company which had a decent update today, maybe a year or so from profitability, something like that, hopefully. But here we've got Gildy Sports, and the idea here is that we bounced off a support line there from July. Got an initial target there to fill that gap up to 1 pence, which hopefully could be done by the end of this month. If we can do that, then there may be a recovery back up towards where the shares were back in at the start of the year, around 1.6, 1.8 pence. And obviously that would be quite a result from where we are now. But early days yet. Probably if you're looking for a signal, it would be an end-of-day close through 0.87. And not only today's high, but also the initial May resistance for the stock. On to Hellenic Dynamics, and here the shares have lived up to their name with a decent turnaround, which was spotted here, I suppose, middle of last month, with the shares pushing through a rising 50-day moving average, and they kept on doing that. Last week's rally had a bit of a pause, but we can still say that above the old January resistance around 0.16, still looking for 0.24 as soon as the end of this month. Onto the other hydrogen stock I'm going to look at today, or I'm looking at today. Here we've got Hydrogen1, which is rallying within a broadening triangle. Rather unusual setup there, but why it's interesting today is we've got the makings of an inverted head and shoulder, so the right shoulder there just being mapped out now, and unfilled gap to the upside yesterday. We've broken the high of the gap up day, which was 53 pence. Above that, looking for as high as 70 pence as soon as the end of next month, and perhaps even sooner. You can see also that there was a gap down, an exhaustion gap back in March, and we had a gap close by signal around 47 pence at the end of that month. So a few charting indicators there. The other point to note is that we did actually have a gap down last month, and that if you take that with the gap higher that we've had today, it's an island reversal, and that is also a strong signal. So ideally, extra or continued end-of-day closes above the 50-day moving average over the next few days ahead of the move towards 70 pence. On to a stock which I don't think I've covered for years, largely because it never really behaves itself, but thought I'd give it a look today. Minoan breaking that April resistance line at 1.1 pence may be significant. If you look closely, you can see that the 50 and 200-day moving averages look like they're curling up as well. So above 1.1 pence, looking for a target here as high as 1.5 or 1.6 pence by the end of next month. But as I've said already, this is not exactly the world's greatest charting candidate, even though we did have a bear trap, and that worked below 0.9 pence. And we've had a decent trading range ever since. Going on to the last three. First one is Serabi, which hopefully is living up to its name in terms of catching up with the gold price, which looks like it's going up and staying up at the moment. Here we've had a gap higher, and that's off the floor of a rising trend channel from back in July last year. Top of the channel there, 55 pence, and we're looking for that to be hit perhaps as soon as the end of next month, and that's set on the basis of the gap higher that we've had today. There's also bullish divergence there, so we've had lower prices from May through March through May, but actually a higher RSI line there as well, and that tends to back momentum in a situation. On to Tirupati, which has celebrated yesterday's decent news. I think the market maybe being a bit stingy in terms of how much it's celebrating, but at least we have bounced off the 30 pence level, the 50-day line, looking for the initial target there at 38, and then after that, maybe by the end of next month, up to 55 pence at the top of that broadening triangle from August last year. Finishing off with URA Holdings, which had its big update, I think, last week. Looks like the shares are now turning up and ready to go up again after their rally from around 1.6 pence. We've got the rising 200-day moving average. We were looking for 4 pence while we were above the 1.6 area. Probably now, hopefully, we'll stay above the 50-day line at 1.9. Best case scenario, target up to 5 pence by the end of next month. Obviously, if you're cautious, just wait for that 2.6 pence resistance to break. That's it from me today. More updates tomorrow.